everybody, I hope you all are doing great. It's a pleasure to have you watch this video. Welcome to this new session with me at Bridge Gap Academy. Today we'll be talking about money and banking. What is money? What are its functions? What are our banking system? How do they function? We'll be discussing about that. Let us get started. What is money? So the money is a commodity which is accepted by general consent as a medium of economic exchange. Whenever I want to buy something, I want to sell something, even I'm accepting the money, even the customer or the seller is accepting the same. So it is a common medium of exchange which is accepted everywhere. It is medium in which prices and values are expressed. It circulates from person to person and even country to country, facilitating trade, and it is the principal measure of wealth. So, this is how you define money. It is a commodity and it is the most important part for medium of exchange. It is the most important thing in order to exchange of goods and services. Now, what are the functions of money? The functions of money are further categorized into three parts, that is primary function, secondary function and contingent function. Let us discuss in brief each one of them. Primary functions. First from the primary function is it acts as a medium of exchange. This is the primary function. The major function of money is to facilitate the process of exchange by removing the defects of barter system. Now, what is barter system? I'll be discussing in the next slide. Firstly, you should know that this is the best process in which you could exchange the goods and services because it is commonly accepted and it is a measure of value. Of course, money is a measure of value. It is monetary expression of market value of the goods and services. For example, I'll say if value of each product is determined in monetary terms, suppose the value of one pen is 5 rupees 5 in India and value of pack of bread is around rupees 45. So, because it is measured in terms of money, because money is a commodity which is very commonly used, I am able to value all the products, I am able to define them by a particular value. So, this is the amount which is required to be paid or received for completing that transaction. So, it is one of the most essential functions of money. Okay. Subsequently, the primary and secondary functions of money are some important uses of money in any economic market. What are the functions? They are just the uses of money. First, we are talking about primary, then we'll be talking about secondary. Okay, so this is what primary functions are. First, it acts as a medium of exchange and it is a measure of value. It defines the value of the goods or services. Then comes secondary functions. What are the secondary functions of money? First, store of value. Being crucial function of money, it can be stored or conserved. Of course, one can store it or conserve it in order to use it in the future or for any purposes. For example, if I want to buy a property, so I can save money. Of course, the value of money is not going to go down. So, of course, it is a store of value only. One can store it for further future purposes and it is economical as well as convenient to store money. Of course, it is very convenient because it doesn't occupy a very large space or anything like that. So, it is store of value. Then, standard of deferred payments. Now, money can be used conveniently for deferred payments which need to be paid by individual. It has become the standard for payment made presently or in the future. Just for say, if someone borrows a certain amount from another individual and they need to repay the amount with interest, with money in mind, it is convenient to pay the interest and make deferred payments. Deferred payments means future payments. Of course, it is convenient for me if the barter system was still continuing, then in exchange of any product, I would have to give them another product or services at the same moment. But with money being into accounts, we could have this facility of standard of deferred payment. So this has led to popularity of lending and borrowing transactions and has contributed a big part to formation of financial institutions. Of course, huge financial institutions have become a very important part because there are many borrowers as well as lenders for the money. So it is a standard of deferred payment. Okay, that is the function of it. Then comes transfer of value. Of course, the utility of money stretches to transfer of value as it can be used to purchase goods not only within the country but beyond the domestic line. So money helps us in transferring of value as well, because we can buy whatever we want, whatever utilities, whatever satisfying products we want, we can have them with money. One can sell or purchase the goods in the domestic or the international market with money as the standard tool. Everywhere money is there, be it called in rupees or dollars, but money is money. Okay, therefore, the availability of money in the market has contributed to stability and liquidity in the market and helps from essential functions of money market. Of course, as you can see that money acts as a common medium of exchange. So, it becomes very convenient for us to have the transfer of value. Okay, because if I want to buy anything, I could just transfer money and get my product. So, I can transfer the value and receive whatever I want. Let us talk about the contingent functions. Besides the primary and secondary functions, money also has some contingent functions. Let us discuss them. First, measurement and distribution of national income. Nation's income of the country can be measured in terms of money, of course, by aggregating the value of all the commodities. Similarly, national income can be distributed to different factors of production by making payments to them in terms of money. So obviously it helps in measuring the national income of the country. Then money equalizes marginal utilities and productivities. The consumer can equalize the marginal utilities of different commodities purchased by them with the help of money. They can also maximize their satisfaction. Similarly, the firms can also equalize the marginal productivities of different factors of production and maximize their profits. For example, let us say if only barter system was in place till today. So it is not necessary that whatever services I am having match the whatever requirement of goods I want to buy, because I could only exchange them for goods for goods or goods for services only. So that wasn't necessary. Okay, so I was not able to maximize my satisfaction. The utility was not there. So in terms of money, now I can buy whatever I want because I have a commodity that is a very common exchange medium of exchange which could be used. Okay, so that's why it equalizes the marginal utilities. Basis of credit, of course, credit can be created by banks from primary deposits of money. The supply of credit in an economy is dependent on supply of nominal money. It is not possible to create credit if they have no reserve money. Of course, when they have money which is reserved, then only banks can give loans, give credits to the consumers, the customers. Liquidity, obviously money increases the liquidity. It is the most liquid asset. In terms of liquidity, it is superior to all other assets and it is 100% liquid. All right, now productivity of capital, this is another function. Money increases the productivity of capital. When we have capital, when we have money, it is the most liquid asset. So it could be used anywhere. If I'm finding that factors of production are more cheap, so I could just invest my money. I could pay more money to factors of production to increase the productivity of my capital in order to have a greater greater return on my capital, and it can be easily transferred from less productive uses to more productive uses. Okay. And guarantee of solvency. Of course, if an individual or any institution has money, that is a gap, has money equal to its liabilities or more than its liabilities, so he cannot be declared insolvent or bankrupt. Due to this reason, individuals and firms keep large amount of money to meet the unexpected needs. If in case of any uncertain situation, that is the reason why money is stored. Now coming to the barter exchange. Barter exchange is directly exchanging of goods for goods without the use of money. This exchange system is very old system. It is not used nowadays, but it was used previously when there was not very much liquidity in the market. So people used to exchange goods for goods. Now, what were the difficulties? What were the drawbacks of using barter exchange? There was lack of common measure of value. Of course, how could you define? Suppose if I was the seller of bread, for example, and you are the seller of wheat. So how do we barter? How do we measure the value of each product? Lack of double coincidence of wants. Suppose if I want wheat, that doesn't mean you also require bread. It could not be, the coincidence of wants was very low. Lack of standard of deferred payments. Of course, the future payment chances were not there. Lack of store of value. We could not store any value of it. Lack of divisibility. It was not divisible, and difficulty in exchange of services. Because in case of services, if you want it right now, or in case of services that has to be provided in the future, it is not necessity that I want that product in the present as well. So barter system was completely a failure. It did not work efficiently. It did not give that utility to any individual. Now, what is supply of money? In macroeconomic, in our statistical terms, the money supply or money stock refers to the total volume of currency which is held by the public at a particular point of time. Whatever fiscal year we are calculating, it is the total money that the public is having. There are several ways to define money, but the standard measure includes currency in circulation, that is physical cash. Whatever physical cash is there in the circulation with the public, and demand deposits, that is depositors can easily access the assets on the books of their financial institutions. So in macroeconomics, money supply is the total amount of cash that is circulating in the public. Okay. Now, total stock of money is that is the currency notes, the coins, the demand deposits is in circulation are held by the public at a given point of time. So supply of money does not include the cash balance which the central or the state government holds, because that is not in any circulation in the country. Okay, the actual circulation that is there, that is called the supply of money, not that is reserved with the banks, not the cash balance that they are holding, that will not be included in supply of money. Now, what are the types of banks? What are its functions? So there are many different types of banks which are based on the functions they perform and the authorities that they deal with. The classifications of banks are in the following types. First, the main bank, that is the central bank, RBI. For India, it is the RBI. Then comes the cooperative banks, commercial banks, regional rural banks, local area banks, specialized banks. Then there are small finances banks and payment banks. Let us have a look at the important ones. Firstly comes the commercial banks. What are commercial banks? Commercial banks are the financial institutions who accept deposits from the public and provide loan facilities for investment with the aim of earning profits. Okay. The they are accepting the deposits from the public, and on that they'll give them interest, and also with that money they provide loan, and the interest which they earn on that, from that interest a part is paid to the customer who have uh, kept their deposits with the bank. So it goes on like that, it functions like that. The primary function of commercial bank is accept deposits. Of course, the bank take the deposits in form of savings, current and fixed deposits. The surplus balances collected from the firm and individuals are lent to the temporary requirements of the commercial transactions. Okay, whatever temporary transactions, whatever there are loans or advances that need to be granted, they are granted from these deposits. Provide loan and advances. Of course, another critical function of this bank is it offers loans and advances to the entrepreneur and business people and collect the interest from them. For every bank, it is the primary source of making profits, because of course if they'll have interest on them, that is the main source of earning the profits for the banks. In this process, a bank retains a small number of deposit as a reserve and lends the remaining amount to the borrower in demand loans or overdraft or cash credit, short-term loans or more such banks. See, what happens is you have to keep certain amount as a reserve with yourself, because if there is any withdrawal of person who have deposited, so the bank should be having that liquidity. So for that reason, banks need to have certain amount as reserves with them. Then comes credit cash. Of course, when a customer is provided with credit or loan, they are not provided with liquid cash. First, a bank account is opened for the customer and then the money is transferred to the account. This process allows the bank to credit money. Okay. Then comes, what are the secondary functions of commercial banks? See, discounting the bills of exchange. See, when there is a written agreement acknowledging that the amount of money to be paid against the goods purchased at the given point of time in the future, it can be cleared before the time through a discounting method of commercial bank. The banks will take the, suppose if I'm going to receive rupees 1000 in the coming 10 days, but right now I am in urgency of liquidity and I go to the bank and I say, can you discount this? So the bank will give me rupees 980 in cash and will keep that exchange. So after 10 days, when that bill due date is has arrived, the bank will take 1000 rupees from there. So bank has discounted that, it has given me on discounted amount. The 20 rupees that it did not discount is a charge of interest. Okay. Overdraft facility, of course, it is an advance given to the customer by keeping the current account to overdraw up to a given limit. There is a limit defined. These are very common things. If you are aware of the banking transactions nowadays, it is very common to handle banking transactions, and since the era is online, so it has become more easier for you all to understand as well. Purchasing and selling of securities. Of course, the bank offers you with the facility of selling and buying the securities also. Locker facility. Yes, lockers facility is also very important. Paying and gathering the credit. It uses different instruments like a promissory note, checks or bills of exchange. So, this is also one of the major secondary function of the commercial banks, that it gathers the credits. Now, how many types of commercial banks are there? The commercial banks are further categorized into three parts. One is the private bank, one is the public bank, and the last one is the foreign bank. Private bank, it is a type of commercial bank where private individual and the business own majority of the share capital. All private banks are recorded as companies with limited liability, such as HDFC, you might have heard of it, Industrial Credit Investment Corporation of India, that is ICICI, and Yes Bank, and more such banks. They all are private banks because major capital is owned by private individuals or the businessmen. Then comes the public bank. It is a bank which is nationalized and the government holds a stake in that. For example, you can say Bank of Baroda or State Bank of India or PNB, Corporation Bank. And then comes foreign banks. They are established in foreign countries and have branches in other countries. You can say American Express Bank, Hong Kong and Shanghai Banking Corporation, Standard and Chartered Bank. Like these banks are foreign banks which are established in foreign countries. Their origin is in foreign countries, but they are having branches in the home country. Okay. So I hope these all are very clear to you all. I hope this money and banking topic is a very interesting topic, and I hope it has been clear to you, because we know what is money, we know what is banking, but we lack words in defining them. We are not aware how to define them, how to clearly express them. So I hope I have helped you a little in clarifying all of it, and I hope you enjoyed watching this video. Thank you for watching this video. Hope to see you soon. Goodbye. Have a great day.